Welcome to our weekly Forex market analysis call, and this is for trading for the week of June 18th to 22nd, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we will start off by taking a look at our calendar here. So we have going into we're looking at the 18th. Okay, so couple of big things that happened last month. We had Fed, FOMC, and we have ECB. And out of ECB, after ECB, we saw Euro drop quite a bit. So leading up to ECB, Euro was going higher because prior to that, over the last couple of weeks, a lot of ECB officials came out and essentially said that they are going to cut back on the asset purchase program and essentially end it and call an end to it. As a result of that, anytime there is a tightening of monetary policy, you will see that the currency goes up. And that's why we had seen Euro holding up into the ECB. It had actually gone up. Now, they did do that. They did announce that they were going to reduce it starting next month, and they were also going to basically put an end to the program, so just roll it off. Prior to this, they had been saying we'll keep extending it for as long as it is needed, and now they've actually come out and said it's not needed anymore. It's done the job that it was meant to do, which was to support the economy, and now they're going to just close it off, end it. Now, that is a good sign, and as a result of that, we saw Euro push up, and then what caused it to drop was that the next thing that the market was expecting was an interest rate hike. So not at this meeting, but what they were looking for was forward guidance as to when the central bank ECB will start raising rates. And this is where they did not get the answer. Well, they did get the answer, but the answer was that it will be way into late summer of 2019, whereas the market was expecting them to do interest rate hikes sooner than that. And as a result, we saw Euro plunge across the board. So that's what happened with ECB. So news is very important. The data that comes out is very important. So we have to pay attention to it. So going into this week, that's the backdrop there. Now we do have ECB President Draghi speaking again on Monday. So it should be more of the same. However, if he says something that kind of is different than what was said in ECB, that will have an impact, or he may just he may just say more of what was said. So just keep that in mind. Now, Australia is another one that has not raised rates at this point. So monetary policy meeting minutes are coming up for Australia as well. Now we are in that cycle of monetary policy tightening. So anything that is a positive in this meeting minutes, for example, if the state of the economy is looking up, data is coming up positive, that kind of things will have positive impact on Australian dollar. But if the tone overall is dovish, that will have a negative impact on Australian dollar. So keep that in mind. Again, we have ECB President Draghi speaking here on Tuesday. Building permits for the U.S. here. The building permits started becoming important ever since the financial crisis because a lot of it was around the housing market. So housing market data has become very important. As a result, this will have an impact on the U.S. dollar. Then we have coming up on Wednesday, we have a lot of central bankers speaking again. So that's something that will have an impact. This is in the New York session. Again, keep that in mind. It will have an impact. Their comments will have an impact. So Reserve Bank of Australia, ECB, Bank of Japan, Fed, all of them, they're speaking. So that will have an impact. Current account is the trade balance number here. And so this number, again, this is where all the tariffs and everything else, this is what it's about, reducing the difference between imports and exports. So if this number is positive, it's not positive as in, if it's better than expected, I should say, then it will be better for the US dollar. Otherwise, it will have a negative impact because this is a number, this is a negative 129 billion that they're trying to reduce here. Going into Thursday, we have another central bank, Swiss National Bank here, announcing their monetary policy. Interest rate here is expected to stay the same. It's negative, but again, it's the commentary that makes a difference, just not just whether they did an interest rate hike or not. Fed raised rates this week, so it's not just about what the interest rate is, but also the comments that or make a huge difference. And then finally on Thursday, we have another central bank. So this week is a huge central bank week, just like last week was. So now we have seen ECB sort of go towards that, where they're talking about interest rate hikes and tightening of monetary policy. Bank of England hasn't done that yet, and data has been coming out quite positive with UK. So keep an eye on it. Again, it's in the comments. If the comments are positive, it will create positive sentiment for the currency, and we're likely to see it go up. So, however, if the commentary is negative, it will have a negative impact. So that's what we have to pay attention to. But I recommend we just be very careful when we have these different central bankers speaking. And then, of course, we have Bank of England, Governor Carney speaking in the afternoon here. So this entire week is full of central bankers. Friday, a lot of PMI numbers. Now, PMI is a leading indicator for retail sales. So this is an important indicator to keep in mind. Now, OPEC meetings. OPEC has kind of been in the forefront with the oil scenario going on. When U.S. pulled out of the Iran nuclear treaty, as a result of that, there was speculation that oil will go up because we don't have Iran supplying oil anymore, and that pushed the oil prices up. But we have seen oil or OPEC essentially say that they will increase oil production if. Sorry about that. Looks like my terminal is connecting. But we've heard OPEC say that they're going to increase oil production should it be needed. So again, any comments coming out of OPEC meetings will have an impact on oil and therefore on a Canadian dollar and any Canadian dollar crosses. Last thing here, CPI numbers for Canada. And CPI numbers are one of the key numbers, or inflation numbers. These are the key numbers that central banks will track. So again, very important. So ton of data coming out this week. So just be mindful of that. All right, so let's go on to our charts now. We will start off with euro dollar here. Oops. All right, so euro after the ECB here, we saw a big push to the downside. Now this is negative. We have a big bearish engulfing candle close. So here, let's take a look. So we have, if we were to do, so Eamon, this is for you. You're looking for a longer term view here. But based on the weekly candle close, this is a bearish and looking for price to drop further, looking for a continuation of this move to the downside. Next target is 1.1320 level here, back into this pin to the downside. Now, I would look for a pullback before it drops here. I think we could get a pullback a little bit into this 1.1650 level or even higher into the top of the pin here. So I would keep that in mind, but the bias is to the downside. But another thing that I want to take a look at, so from your measured move scenario, so we could sort of look at that as well. So Eamon, the projections you were making essentially. So overall biases to the downside, and there is room all the way down, or for this to continue all the way down. Of course, this will not happen right away, but just something to keep in mind if you're looking for a longer term move. But basically, right now, the bias is to the downside. My target is a 1.1320 level to the downside. For pound dollar here, we have a bearish candle close for the weekly. Same thing, we had a drop, a pullback, and now I'm looking for price to drop further. Target is a 1.2920 level, which is the base of this candle here. So my bias for pound dollar is bearish as well, looking for it to continue lower. Now, there is a very important thing to pay attention to here. If the price the price needs to break the low here. If the price does not break the low here, it can stay in this range as well and continue higher in the range, because for the last 4 weeks, price has continued or has stayed in this range. So it's important for us to see a break of 1.3200 level to the downside. If it doesn't break, then it can go back towards the top of the range, which is 1.3500. But if it breaks the bottom, I'm looking for price to continue lower. So my bias is to the downside. But again, if it doesn't break the low, then the second scenario is that it goes back into the range. Aussie dollar here. Aussie took a hit last week as well. We have a big bearish candle close here. The bias here is to the downside as well. And the next target here will be 0.7320 level. And beyond that, we're looking at 0.7230 level to the downside, or actually we should say 50 level here. So bias overall is to the downside for Aussie dollar 73.20 first target, 72.50 second target to the downside. New Zealand dollar here. This one is also biased to the downside. And in this one, the first target would be 0.6850 level. We are coming into the lows here, so we have to be mindful. The next target would be 0.6780 level. So bias for New Zealand dollar is also to the downside. That's a nice bearish engulfing candle. So I'm looking for price to continue lower. Dollar CAD here, we have a bullish candle close here. Now we have broken the high, so this one is continuation to the upside here. Looking for price to move higher. Bias is bullish. Next target is 1.3380 level. So again, bias is to the upside. So look for pullbacks here. This one could pull back into the high once again before it continues higher. But the bias is to the upside for this one for it to continue here. So dollar CAD is bullish. Euro pound. Euro pound here, this one, my computer keeps bringing these back every time it restarts. Sorry, bear with me here, please. Okay, so this one has been in a range for quite some time. So this is the immediate range that it's been in for multiple weeks here. Now we have a bearish candle close. So we could see this continue lower. Next target would be 0.8670, which is the bottom of this one here. And then looking for it to continue lower into 0.8580 level. So it hasn't broken out of this range yet. We have to see a break here. Right now, it is biased to the downside, looking for price to continue into the bottom of the range here. Euro Swiss franc here, our bias is sort of a neutral here. So we have a neutral candle close, price has dropped, pulled back, and now we have a neutral candle close. Price has been in this range here for a little while. So in this case, bias is very neutral. This could go either way, but I think there is some bearishness to this still because it's holding the high. It hasn't pulled back yet. It hasn't broken the high. So I'm looking for it to continue lower. So, or this could continue lower if once it breaks out of this range. So bias is bearish to neutral for Euro Swiss franc. Weekly candle close is very neutral, but we would have to look for a close below 1.1520 level for it to continue lower. So my bias is bearish to neutral here. And target here would be 1.1360 level to the downside. Pound Swiss franc here, this one has also just been trading sideways for the entire week here. So here we can see it's pulled back, but hasn't really done much. So overall, the bias is still to the downside. It could pull back higher into this next level at 1.3460 level, but right now it's just sitting in this little range here for the last 3 weeks. It hasn't broken out of the range. So this one, bias is range bound for this one. Now, if it breaks out of the high here at 1.3280 level, then the next target would be a 1.3265 level to the top. Otherwise, I'm looking for price to come back into the bottom of the range here, 1.3050. So essentially, I'm going to trade it as a range bound for now, unless it breaks out to the upside. Then we have to look for a longer move here. But otherwise, I'm just looking for price to stay back and come back into the bottom of the range here. Dollar Swiss franc hasn't really done well. It has closed actually bullish here. I thought this was a weekly. It looks kind of sideways here, but overall it is looking bullish. So we have a bullish engulfing candle. This one has been going up, pull back, and now we have a bullish candle close here. So looking for price to continue higher. So 1.0048 level, this will be the next target to the upside. Above that, I'm looking for 1.0180 as the second target. But this is bullish. But do watch out the high here. Again, anytime when we're looking for a continuation move, we need to see a break of the high or the low. So in this case, looking for a break of the high before it continues higher. First target would be this high. Pound CAD here. Pound CAD is looking... So pound CAD is looking bullish here. Price has gone up. The next target that we have here is right into here at 1.7880 level. So bias is bullish for pound CAD. It kind of stayed here for a while, and then it has it's moved here. Again, we need to see a break here, but the bias is bullish. Yen crosses. Let's take a quick peek here. For the yen crosses, we have so for this one here, for pound yen, this is kind of sideways. It's been trading in this range for a while. So if you take a look here, this is where price has been holding. And I would be looking for price to drop here to the downside, and target is 145.00 will be the target to the downside. But from weekly perspective, we can see that price is just going sideways here. And now, so we have seen this bit of a stair step sort of a scenario here. Price dropped, pulled back, drop, pull back. So I'm looking for a drop once again. So bias is to the downside. But again, first target will be the bottom here, bottom of this little, the support here, 145.00. And then if it breaks the low, then we are looking at 143.20 to the downside. So my bias for pound yen is bearish. Now we have, sorry, my indicator is giving me trouble there. That's why it keeps popping up. I'll have to fix that. This one is euro yen. So the bias here stays to the downside. What we see here is that we have seen price drop, pull back, drop, pull back, and now I'm looking for a continuation to the downside. It hasn't broken the high here. The weekly candle close is just bearish to neutral here. We have pins on both sides, but because it hasn't broken the high, I'm looking for price to continue lower. And target here, first target here will be 125.80 level here. Now, we do need to keep in mind that it breaks the low here. So it has to break the low before it continues to the downside. So first target, let's say 127.50 level. Second target here, 126.20. and then I'm looking for price to come back lower into 124.7 or 124.80 level to the downside, looking for price to come back into the pen here. So bias is bearish to neutral here. Dollar yen here, we have seen price go up. US dollar was the beneficiary of the ECB statement there. US dollar went up, and as a result of that, dollar yen, all the US dollar crosses went up across the board. Dollar yen went up as well. In this one, so bias is bullish. That's a nice, strong bullish candle close. First target would be 111.40 level to the upside. And once we see a break of that, I'm looking for 113.50 to the upside. So bias will be bullish for dollar yen. And for Aussie yen, this one is looking bearish. We've seen price test the high several times here, hasn't closed to the downside. So now I'm looking for price to continue lower. We have a bearish pin bar, which I really like. So looking for price to continue into the low here. It is in this range and stayed in this range for quite some time. Rejected the high, so I'm looking for price to continue lower. 80.50 is the target to the downside. So that's the first target. And then we're looking for 79.20 level to the downside. So bias is bearish for Aussie yen. All right, gold. Let's take a look at gold. And here we go. Gold, what are we looking at? So last week we had talked about how price has dropped here and it was holding below this level here. So it's still holding below that support resistance level. We have a bearish candle close. So generally when US dollar goes up, gold tends to go down. So here we have a bearish engulfing candle close, looking for price to drop further. And target here is 1259.60 level to the downside. So my bias is bearish for gold and looking for this move to continue to the downside. So we had a drop, pullback, and now I'm looking for a drop for gold. And while we are here, might as well take a look at oil here. Oil got killed there on Friday. So let's take a look. In this case, we have a bearish candle close here and bearish pin bar, looking for price to continue lower. So 61.70 will be the target to the downside for oil here. And Bitcoin, okay. Before we do Bitcoin, let's do copper. Copper here we have a bullish pin bar looking for price to continue higher. First target would be 2.60, and then next target above that we are looking at 2.68 to the upside. So bias is bullish for copper. And Bitcoin. Let me see if I have a chart open for Bitcoin. Here we go. Bitcoin took a there's a big gap to the downside there. Let's see. So it looks like I do not have a connection here. Okay, so I'm sorry, we can take a look at Bitcoin tomorrow because it doesn't, looks like I have a connection problem here with my terminal. All right, any other questions? Okay, if there are no other questions, so we will call it a wrap. If anybody is interested in Trade Copier service. I would just like to go over that once again. So I'm doing a beta test of the Trade Copier service. We're just in the process of kind of going through the logistics and setting things up and so forth. So I'm looking for beta testers. So Trade Copier service, basically you attach your your account to my account, and any trades that I take in my account will directly get copied to your own account. You do have full control over your account. You can change those trades, do whatever you want to them. I do not suggest doing that, but you will have full control. It's your account, and you will still be managing your own account. So I'm not exactly managing your accounts for you, but any trades that I take will get copied into your account. And currently, the target price for this service will be $997 per month with a setup fee of $997. But currently, I'm looking for $297 per month. So this is only this is a beta. So anybody who joins the beta program, the price will stay at this level regardless of where the prices go to after this one. So this price will get grandfathered. So anybody who's joining now will get grandfathered at this price. And the idea is that we'll have a few hiccups in the beginning, and as things kind of start rolling properly, you will see a bigger benefit as a result of that. I am offering an option of yearly subscription as well at $2,970. If you were to buy it at this price, it will be almost $12,000. And this way it's only $2,970. So even from this price, you basically get 2 months worth of free, or you get 2 months free. So if you have any questions about that, you can reach out to me. Or if you want to join this program, you can go to bit.ly Venus Copier monthly for the monthly subscription, or you can go to Venus Copier yearly. So whichever one you join at, you will stay at that price for as long as you stay with me. It will never go up. So this is what I'm looking for, basically looking for beta testers as I am launching this. All right, so we will wrap it up here. You guys have a wonderful rest of the weekend, and I will see you again next week then. Bye for now.